Now we move to our new subtopic, cash conversion cycle. Alright, so what is cash conversion cycle? It's actually length of time from the beginning of the production process to the point when cash is collected from the sales of finished product, and then we have to less with average payment period. So the cash conversion cycle is actually represent the amount of the firm resources are tied up. So it means that here how long it takes that from process of the product until they receive their money, and then also we have to deduct the payable deferral period. So for the cash conversion cycle, there are three items which are related. Number one is ICP. ICP stands for the inventory conversion period. RCP stands for the receivable collection period, and PDP stands for payable deferral period. And the formula is CCC equals to ICP plus with the RCP and minus with PDP. Inventory conversion period. So the formula is inventory, we divide by sales, divide by 360, or inventory divide by cost of goods sold, divide by 360. So we have two formulas here. So based on the final exam, if the question is given cost of goods sold and sales, so we should take cost of goods sold, is more accurate. If the statement do not give you cost of goods sold, only we have sales, so we can take sales. Alright, but both are right. Inventory collection period is actually the average length of time required to convert materials into finished good and then sell to the customer. So it means that here how long it takes from you would like to convert from raw material that you purchase to become a finished good, and then you want to sell to your customer. So the next one will be receivable collection period. So receivable collection period divided by credit sales, and then credit sales divided by 360. So this is the average length of time required to convert firm's receivable into cash. So it means that here how long it takes from you make sales to your customer and then until you get back your money. Alright, payables deferral period. So this is refers to the amount that we paid to the creditor. So payables divided by cost of goods sold divided by 360 days. So payables deferral period, PDP, is actually average length of time between the purchase of material and labor and the payment of cash for them. So it means that how long it takes from we purchase our material until we make payment to our creditor. Alright, now we move on to the example of cash conversion cycle question. Alright, so given here, C Industries has annual sales of 10 million. Cost of goods sold is 70% of sales. The average inventory is 1.25 million. And then the average receivable is 1.1 million and the average payables is 0.5 million. So what you have to do is compute the cash conversion cycle for the C Industries. So you may use the formula given by the previous slide to calculate for the. So you have to calculate using the previous formula in order to get the ICP, and then receivable collection period, RCP, and then we minus with PDP. Alright, based on the formula given in our previous slide. And you should get the 78 days. So this is how to reduce the cash conversion cycle. So it means that here for a company, if the cash conversion cycle is less, it's good for a company. Why? Because they take less time to convert their cash, right? So number one is to increase the inventory turnover. So for example, if the inventory turnover, for example, 10 times in a year compared with the 12 times in a year, so the 12 times is better. Every month, So number 2, improve debt collection procedures so as to collect cash outstanding faster. So it means that here they should have the proper procedures, make sure that their customer pay their debt on time. Alright, number 3, settle account payable slowly but without damaging the firm's credit rating. Let's say if they would like to pay to the supplier, they would like to pay, extend for a period, but please make sure that it will not affect the credit rating. All right, it will not affect the position of the company. All right, number 4, manage mere processing clearing time in order to reduce when collecting from customers. So anything, all the clerical work, admin work in order, when collecting debt from your customer, then you should eliminate. And then this one also, you have to increase them when paying supplier. If you can delay. So we can conclude that to decrease our cash conversion cycle here, so what we can do is we decrease our inventory conversion period, and then we reduce our receivable collection period, and we increase our payable deferral period.